Good morning and welcome back to Almus Market Mornings. Well, the most significant development that has come out of from last week has been the US operation in Venezuela. Now, Nicolas Maduro, who was the president since 2013, was captured by the US forces and brought to New York. All this while President Trump has announced that US would be running things temporarily. It's a significant update. There are various things to consider. Venezuela has the largest oil reserves. Geopolitically, whether this could keep Iran quiet or can China take inspiration from such operations? All these things to think about just within a few days of the start of the year. Good morning, JK. Quite the start to 2026, and actually the first trading day where most should be back post holidays. What are you making out of these developments?
Good morning, Swaraj. Welcome to the full-fledged trading session of 2026. Yes, you couldn't have had a bigger breaking news for the markets to start the year. Now, geopolitical tensions are back on the rise in the year, with the US launching land strikes on Venezuela, leading to capture of the president. The move is likely to have a lot of repercussions on various asset classes, including oil and metals. Now, the biggest downside of the operation could be the precedent it sets, affirming the right of great powers to intervene in their backyards against leaders. They seem to be illegitimate or a threat. So that's something that we have to watch out. The Trump's military operation, makes a negotiated end to Russia-Ukraine war even more a remote possibility, at least for the time being. Similar reaction is likely in China, which now views which has been viewing Taiwan as a breakaway province and its government as illegitimate, and their action in the region is also very likely. So these are the larger implications of the action that US has taken in in Venezuela. More specifically, for the markets, precious metals will continue to be in demand as a safe haven, particularly gold, which has remained subdued for some time. Oil prices views are somewhat mixed. Near term, I think there is not much shift that we should see in the prices, although the temporary halt to supplies from Venezuela in view of the political situation might impact the prices a little bit. But over the medium term, with the US getting control of the oil, resources in the country, we should see more oil flowing into the world, and that should take the prices much lower towards $50. That's a medium term view. Now, while that is a very easy conclusion, we should also wait to see how OPEC reacts to this. In case they feel the prices are going to fall too far, then they may even come and cut the productions. So that is quite a mixed situation, but I think in the medium term, some downside is definitely there for oil prices as well. Now, what implications that we have for India is, India does not have too much of a trade with Venezuela. So, at least from the trade point of view, not much impact. But there are some companies in India who have investments in Venezuela, and we had to see how their investments are impacted going forward, particularly in the new regime that will be supported by US as well. So we have a big event that has happened, and then market actually, as it has happened over the weekend, market had a lot of time to digest it and its implications, and relatively we have seen calmer reactions in the market, except that gold has once again touched 4,400 mark in early Asian trade. However, if you look at the stock markets, they have been again roaring, particularly in Japan and Taiwan. Both are doing very well, and even US stock futures are doing good. Now, talking of the stock market, I think this action, in any case, will help American companies, particularly in the oil sector, and that can actually keep the US stock market also supported, at least for near term. The equity market seems to be, not in a very shaky position. So it can have some challenges going forward, particularly because of the tech sector valuations that we have been talking about for quite some time. You know, 2025 has given very good return in most of the markets. Even India eventually turned out 10% return over the year. Of course, the highest return came from the Nasdaq, and this is also beaten the previous all-time highs for several times during the year. I'm sorry, the highest return, of course, came from Japan. But over the 3-year average, I think US markets have done very well. 3-year average of Nasdaq has been much more. So I think that trend at least for should continue at least for the near term. As far as the dollar is concerned, I think we have seen most of the year a dollar in a falling trend, and we are likely to see some retracement in the dollar to the higher side. Now that even 97 on the dollar index was not broken, and the expectation of US stocks doing well, and perhaps even the dollar yields going up. Now there are also already signs of bond market weakness. Japanese 10-year yields have hit a new cycle high today morning, and even 30-year is pushing higher. And that obviously will have implications for the other markets as well. So bond yields and better stock market expectations can lead to some dollar demand, while other regions, including Europe, UK, and Japan, their performance has not been has been anything but stellar. So I think, and we have seen the US GDP coming at 4.3% for the Q3. So I think dollar demand is a natural evolvement, at least for the time being. Possibly, I also feel that with all these developments, the de-dollarization move away from the dollar could also be, take a step back for the time being to watch how the developments take place. But then, medium term, that trend will be very much in place. As far as India is concerned, we saw the dollar rupee break above 90 once again on Friday, and now 90.50 becomes a focus. That's where the last time intervention happened. Above 90.50 was the intervention level from RBI. I think important thing for the Indian market is the breakup in the Indian stock index NSE on Friday, which had its highest ever weekly and daily close. So technically, that is a good development, and seems to be well supported. Being a new year, we can see some allocations from foreign investors as well. The important thing for the Indian markets would be uh, the trade deal, FII flows, and also for Indian stocks, as per the latest PE reading, is still on the higher side. However, what works in India's favor for a higher premium is the higher growth. Now, so far in the last few quarters, growth rate has beaten expectations, and we need growth to keep higher than the average, long-term average, to keep the investors interested. That's very key for keep the global investors interested and to get the money, the capital flows, into the Indian market. Otherwise, I think if without these positives of trade deal and the also capital flows, I think rupee may continue to be under pressure, particularly in view of the fact that dollar index itself is going to see some strength for the near term. Still feel 91 to 92 is a big level. That range should hold on the upside. And downside, of course, 89 will be a very key level to hold. So I think this may be holding for at least for a couple of weeks in this year. And then we'll see now that we are into the new year, bigger players come back with fresh risk capital and fresh strategies. So we should be a bit open on our outlook as far as the medium term direction for the markets is concerned. Thank you.
Thank you, JK. And of course, we will be closely watching how this entire Venezuelan issue impacts the oil. But it seems that it's mixed. Like in the near term, not much might shift. Temporary halt of Venezuelan oil might be, it's likely, but in the medium term, it's positive and helps bring prices lower as US may open some taps because in the end, Venezuela has the largest oil reserves in the world. OPEC reaction will also be seen because if, let's say, more supply is coming in, they may react by reducing their own supply. Um, Today morning, Asian Open, it seems equities are quite positive. US stock futures are also positive. Japanese yields are making new cycle highs, especially the 10-year. The likely trend to watch is for a short-term dollar demand because it has been persistently sold off last year. So short-term move higher in the dollar index is likely. And when it comes to rupee, if the dollar index strength persists, then it may be a negative rupee at least on the short term. But on the positive side, we had a good performance by the equities on Friday, and we will see if we get some foreign allocation into Indian equities. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh number of updates.